there's no external shareholders who are looking to maximise profit from what we do. So that's a really important point. We're about maximising value for the membership, for the community, and for our stakeholders, not about enriching a small group of people by lending at the highest price we possibly can do to people who perhaps that's not always appropriate for. I think the other thing that makes us different is that we do have that real focus on what people are looking for in terms of how they actually live their lives. And an example of that would be that loan repayments for us can be split between weekly, fortnightly, monthly, or 4-weekly. And we advise people to choose the frequency that matches when they get the majority of their income. Now, most institutions will say, okay, you pay your loan back once a month because that's how most people get paid. And of course, for most people who are banks willing to lend to, that probably is how they get paid. But in reality, for a lot of people, they're working to a weekly budgeting cycle, or they're working to a fortnightly budgeting cycle, or in some cases, of course, a 4-weekly one. So we've always taken the view that it's much better for both us and for the borrower if we work with that, and we adjust our products and we adjust what we do to reflect how people actually live their lives.
So the Family Finance Plan is now an award-winning service because it gives families credit when they need it. So what that means is they've got a safety net against unexpected costs, and also at stretching times of the year, like back to school or Christmas. So the way it actually works is it provides a £500 borrowing facility automatically when the member takes it out and switches their child benefit payments to the credit union. So the member only pays interest when they're actually borrowing money, and then the amount borrowed reduces as their child benefit payments arrive. So it is almost a continuous revolving facility. What's quite interesting is that the member can also build up a savings balance once their fixed repayment amount for any of the borrowings being taken from the child benefit payment. Our underwriting criteria is much more flexible than a typical high street bank, and that means that we can offer families on benefits a relevant proposition that really helps them when they need it.
We do take more account of people's circumstances and the story that's behind those circumstances as well. So oftentimes a person or two different people could have pretty much the same credit score, but they can both be driven by very different situations that they found themselves in. One person might just not have a very good track record of paying stuff back. The other one might have run into a particular issue where they've lost a job, they've had a relationship breakdown, or some other situations occurred that they're then recovering from and able to move forwards from. The credit score itself wouldn't necessarily tell you anything about those two different aspects.
So we work with a group of members, some community researchers, and in fact the University of Bristol, because they've got a particular focus on personal finance. And we've been exploring the barriers that low-income families face when potentially saving money. And as a result, we created a different type of savings product, which we call Family Saver. And a bit like that Family Finance Plan, it's linked to child benefit payments, and it gives the member the option of nominating a regular amount to put away from their child benefit, as well as naming the account to make it more relevant to their savings goal. I know that's something that some organizations have done in the past, but for us, it was a really powerful insight. And then what we're also doing is testing out a small member reward payment. So if the member sticks to their regular savings goal, no matter how small, we will give them a small reward payment after a period of time. It's a program to provide simple savings, affordable loans to employees of organizations who we partner with. So the way it works is the employee can set up a regular savings amount, or apply for a loan, and then those repayments or that regular saving amount would come directly from their net pay before they receive it. So that's a really, it's proved to be a very effective and easy way for employees to access financial products. Well, the employee gets access to those kind of products that are competitive, ethical, and locally offered. And actually, the research has proved that those employees feel better off as a result. Their financial resilience is stronger, and actually, their well-being's improved because they are sorting aspects of their financial life. So the employee really feels better as a result. But what's interesting is the employer benefits as well, because if the employee is feeling better as a result, all the statistics show that they turn up for work more often. They're more productive when they're there, because genuinely they feel better off.
In essence, though, we're really going to be able to increase our scale and our impact. And we'll do that in a number of ways. So growing the number of people who benefit from our service across the region, that's very important to us, taking our message out there. There are increasing numbers of people who could benefit from our service at the moment. The Financial Conduct Authority regularly looks at the number of people who show aspects of financial vulnerability, and there are around 25 million people within the country who have some aspect or other of financial vulnerability in 2022. There are many of those people across the southwest, unfortunately. Even one of the things, actually, just to follow up on the point around money at work, sometimes people have the impression that actually, for that group, you're talking about employees, how poorly off can they be? Well, the sad reality of day-to-day life at the moment, because of the way that cost of living has affected everybody, but most of all those who are on lower incomes, is that people in work are often just as financially vulnerable and are struggling almost as much as people who are on even lower fixed incomes from benefits. So the scale of challenge is greater than it's ever been. And with the bond investment, we're going to be able to do more to help do what we can to help people to manage through these tough times that we're all in.